Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Monday, August 31st, 2009. We begin with the Aussie yen pair to show the increase in risk aversion to start this week. The pair extended its decline from late Friday to the 77.50 area. That level provided some support, and the pair managed to cut some of its earlier losses for the most part. With today's low being higher than last week's major low, we are setting up an upward sloping line of support for the pair. The decline in the pair was led by a drop in the Chinese stock market of nearly 7%, which increased risk aversion. In Japan, Japan's industrial production increased 1.9% in July, which, despite being better than expected, was still the slowest pace of output in 4 months. Retail sales, meanwhile, were down 2.5% compared to a year ago in July, a figure that also beat forecasts, but is still the 11th straight month that sales have been negative on an annual basis. That marks the biggest losing streak since 2003 and represents how the Japanese economy is being pressured by depressed consumer spending. The pound yen slid to a fresh 7-week low, falling 200 pips from its open to a low near the 150 level. That extended the pair's decline from Friday when it bounced down off a level of support turn resistance at 153.50. The pound managed to pare some of its deeper losses, retracing between 50% and 38.2% of the recent two-session down move. The pound dollar reflected the up and down movements in the market today, declining overnight in favor of the greenback, but then rebounding in New York trading. The range in today's trading stayed within the low and high from last week, reflecting a bit of consolidation. The euro dollar bounced up off an upward sloping line of support, jumping about 100 pips after a better than expected US release. It pushed the pair back up to a recently formed downward sloping line of resistance. A decline in US equities was unable to keep the pair down in New York trading, though price action resembles a bit of sideways trading until either support or resistance is broken. In the Eurozone, consumer prices were down 0.2% on the year in August, which was a smaller drop than expected. It follows a July figure of negative 0.7%, which was a record annual decline. Though the central bank is worried about the threat of deflation, it has said that the recent move into negative territory in consumer prices would be temporary. Inflation may accelerate as the global economy begins to recover from the worst recession since World War II. That should put pressure on commodity and oil prices, which will increase prices overall. On the downside, higher unemployment and lower consumer spending could keep stores from raising prices or encourage them to offer further discounts. In the US, the Chicago Business Barometer PMI ended 10 months of contraction to reach neutral territory. Both new orders and production rose above the 50 levels for the first time this year, while the prices paid gouge increased, deflecting fears of deflation. Inventories and employment remained below the 50 level, but both saw upticks, meaning the contraction there is not as severe as it was a month ago. The decline in Chinese stocks weakened the dollar-yen pair, pushing it below last week's support and violating the descending triangle pattern on the downside. The pair fell to 92.55, its weakest level since July 13th. U.S. stocks slid at the open, though they managed to move off their session lows later in New York trading, which helped the greenback erase some of its earlier losses. The U.S. dollar-Canadian dollar pair rose to a high of 1.1090 overnight on the bout of risk aversion, and as oil prices fell more than 4%, falling below $70 a barrel. That intra-session high ran up against the level of resistance, and with the Chicago PMI release coming in better than expected, the pair fell back down, reversing most of its earlier gains. So it was a topsy-turvy beginning to the week, and we'll see how things develop the rest of the way. Tonight, Australia will release data on building approvals and its current account, which will be followed up by the interest rate decision by the Reserve Bank of Australia. Overnight, Germany will post its retail sales and unemployment change, while the UK releases data on manufacturing, mortgage approvals, and consumer lending. Tomorrow, the US will release its ISM manufacturing PMI, along with pending home sales and construction spending. And that concludes today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.